This year so far in 2026, I received about $642 in dividends, not from working, not from selling any of my stocks. These companies pay me for simply holding on to my shares. I'm getting paid from some of the biggest companies in the world, like Apple, Microsoft, Google, and NVDA. I have one REIT in the mix, which is Realty Income, as well as Main Street Capital, which is a business development company, along with a few ETFs, exchange-traded funds like VTI, VOO, and SCHD. So today we're taking a quick rundown of all of my dividends received so far this year in my taxable accounts. I will come with an update on some of my retirement positions that I've been sharing over the last few years. So let's take a look at the companies behind these payments. Every single dividend payment started with buying one share and another, just consistently buying and holding. It's a part of my journey, and that's what I'm sharing here, my investing journey. So I hope this gives you some encouragement. Let's start with some of my dividends that I received in my account over at MooMoo. And this is the account that I chose to put my most dividend-focused investments into, starting with Main Street Capital. So far this year, I've received $100.64. Main is one of 3 investments that I have in my portfolio that pay on a monthly basis. And in addition to that, they reward their shareholders with supplemental dividends, which is a sign that the management feels comfortable and confident about their earnings. Now, this is an investment that does not have the growth of a Microsoft or an NVDA, but that's intentional. You're not going to get explosive growth of BDC, but what they do is allow you to generate income. Business development companies like this loan money to middle market businesses, allowing them to collect the interest and then pass those profits on to us, the shareholders. So this is one for investors looking for dependable income when it comes to the dividend safety score on Simply Safe Dividends. I'm going to link this in the description so you can take a look at what companies are on this list. It has a dividend yield of 6% and an uninterrupted dividend streak of 18 years. This is a company that has never reduced its regular dividend since making its first payout back in 2007. It's proven itself through 2 recessions. Next up, let's take a look at Realty Income. And this one rates number 3 on this listing of high dividend stocks. When it comes to Realty Income, so far, I've received $170.25. This is the only REIT that I hold in my portfolio, a real estate investment trust. It owns thousands of retail properties across the U.S., which are leased to hundreds of tenants operating in dozens of different industries. Familiar names like BJ's, 7-Eleven, AMC Theaters, FedEx, Walmart, Costco, Home Depot. It has a dividend yield of 5.5%. Also rated safe, 56 years of uninterrupted dividends, and over 100 straight increases. Through everything that we have faced over the years, financial crisis, inflation, high interest rates, they manage to always pay their investors every month. Now let's take a look at the ETFs in my MooMoo portfolio. SCHD, I received $29.41. And SPHD, I received $50.36. So these funds are Schwab's U.S. Dividend Equity ETF and Invesco's S&P 500 High Dividend Low Volatility ETF. Very different funds. CHD focuses on quality companies that consistently grow their dividends, while SPHD focuses on generating income today through higher yielding stocks. So SPHD is that third monthly dividend investment in my portfolio, while SCHD does pay quarterly. SCHD has a little over 100 holdings, while SPHD has just 55. And of course, they both give exposure to quality dividend-focused companies like Pepsi, Verizon, Chevron, Pfizer, and Altria. Next up, VTI. It pays a quarterly dividend. It is the Vanguard Total Stock Market ETF. I hold this one in 2 portfolios. The last dividend payment was 104. And my account over at Public, the account where I did my challenge, buying $10 daily for over 3 years straight, I just stopped contributing in January of 2026. I started back in September of 22. Many of you may have seen videos where I share those updates. When it comes to that portfolio, I've stopped contributing to it, but the dividends don't stop and the growth hasn't either. My portfolio's up $1,000 since January, and so far this year, I've received $72 in dividends. The dividends vary from time to time, but when it comes to VTI, it has increased over the last year. It's the total stock market. It's a basic core investment, great for anyone just starting out. It gives us growth through the share appreciation along with those dividends on a quarterly basis. Now, over in my account at Weeb, I have some more shares of VTI, and in that portfolio, I've received $47.86 year to date and $77.03 when it comes to VOO. VOO is the Vanguard S&P 500 ETF. Its last dividend payout is $1.96 per share, and it's another foundational investment, beginner-friendly investment, just like VTI when it comes to my portfolio, giving exposure to U.S. companies with the highest market cap, several of which we're going to be taking a look at because they also pay dividends, like Meta, Google, Microsoft, Apple, and NVDA. Now let's touch on those companies that pay dividends, like Microsoft, a technology company focused on AI. I've added these companies into my portfolio for growth, but it's always great to get that little extra added bonus of a dividend for holding on to my shares long term. So when it comes to Microsoft, year to date, I've received $12.10. Next, Apple, I received $31.88. Apple has increased their dividend this year by about 4%. It's never been known for being a huge dividend payer. Instead, they usually focus on stock buybacks and reinvesting into the company. When it comes to my NVDA shares in this portfolio, I received $5.62, a company that has been reinvesting billions into AI chips, which is okay with me. I don't mind my growth stocks focusing on just that growth. But over time, additional income may come from these big names. A couple of others on my list: Disney, I received $3.75. And Target, I received $23.99. Two investments that have not been very exciting when it comes to their growth story in my portfolio. But while I'm waiting for the small positions that I'm holding to turn around, it is nice to at least be getting that dividend. When it comes to these portfolios, most of the positions currently have the drip on, where I'm just reinvesting the money right back into the same investment. But I currently have it off for Realty income as well as SPHD, so that I can focus on other investments that are more in line with the direction that I want to focus on right now, which is growth more so than dividends. But I love the little extra added boost that it gives to my portfolio. I love tracking and being rewarded for being a buy and hold investor. So every dividend that I shared today started with one decision, which was to invest. And every quarter, those dividends help my portfolio to grow, along with that share appreciation over time. I always say it doesn't happen overnight. Just take it step by step, one investment at a time. I won't even say one share at a time, because some of these investments have a higher share price. But in time, steadily investing, your share sizes will grow. So I hope you enjoyed today's update. Let me know in the comments, what investment paid you the most so far in 2026? Don't forget to hit the like button, subscribe to the channel, hype this video, turn on that notification bell so you don't miss any of my videos or live streams. I am Lisa J. Stocks, and I'm looking forward to all of your comments and questions. Thanks for watching. Okay, bye.